So when it comes to trading, a lot of the times what most people try to do is try to figure out if the market's bullish or bearish or in a range. Uh, I want to identify. I want to show you guys what a ranging market looks like because sometimes people don't understand what necessarily a range is. So let me go ahead and take this off here. So a ranging market is literally a sideways market, or when price is bouncing between uh a certain area. So this area is resistance, and this area is support. But when you look at that, most of the time people don't take this into consideration too much. They always say that they always consider this an accumulation phase and then the market explodes to the upside. Now, that's not always the case because what happens in this area, and I want to point out two things and tell you guys two things that happens here. So this is called a equilibrium market right here. All right. So what's happening in here when you look at it, there's an equal amount of buyers and an equal amount of sellers. Hence why price is not breaking higher than this point or going lower than this point. So when you see that, you should automatically be saying, okay, this is already a 50-50 market. Either bulls or bears could win this market. All right. So when you look at this, you want to do you there's two things you want to do. You want to box this in. All right. So I'm going to show you this real quick. So you box it in just like that. After you box that market in, what you want to do here is wait for the breakout to either the upside or the breakout to the downside. And you want a clean breakout. You don't want like wicks. You see how it broke up, but it didn't close above this box? That's the
Hmm.
problem. You don't want to get in a trade like this. You want to wait till it's like a clean candlestick coming outside of this range. All right. So, for example, there's another one over here, and I'll show you. Boom, right there. And this is actually the easiest trading method to trade. So, what you do, you box it up just like such, ranging market. And you see how this candle broke out as a clean breakout. And then the next candle, it had a rejection here. And these two candles are the candles that you would look to enter in on this trade. And then you would ride this thing as high as it could go. This one may have, got your attention, say maybe I should start selling. But if you look, it never closed back inside the box and it pushed higher. All right. But I'll get into that soon. But going back to
And the
this, uh-huh.
first candle, that's what do you call that? The mother candle?
Yes, the mother stick candle.
Mother stick. Okay.
Yeah. So when you have a mother stick candle range, it could be like 20 candles within one candle. It could be five. It could be like 10. It could be three. But if you see something like this, the mother stick candle range could have literally 50 candles inside one candle. And you see that more so in Forex than crypto. Crypto, it doesn't range too much. It can, but it doesn't do that too often. But when you see this, this is a easy opportunity or easy area to take a trade. So what happens here, like I was saying earlier, to elaborate on what I was saying about most people think this is a accumulation zone. This is not always an accumulation zone. This could be a distribution zone. So what does that mean? A distribution zone means where sellers are taking over this market. You never know this is going to be until it breaks either to the downside or the upside. Unless you go to the smaller time frames, you could get an idea who's winning. But when it comes to these ranges, it's 50-50, and these are could be either a distribution or an accumulation zone. All right. So secrets on how to trade these. This is a Wall Street move. You see how price dropped down in here into this range. Y'all see that?
Yeah, I'm with you.
All right. So when you see that, this could be, I'm going to tell you guys what this could be. So this is called a drop. The ranging area is called the base. All right. So you got the drop, you got the base, and then the next move could either be the rally, which is a break to the upside, or the drop, which could be to the downside here. So there's different phases of this. You got the drop, base, rally. You got the drop, base, drop. And it could happen vice versa. It could be a drop, base, rally, or it could be a rally, base, and then a rally, or it could be a rally, base, then a drop. All right. So if it was to do this, if you hear this scenario in your head, if you hear drop, base, rally, is that bullish or bearish to you guys? What does that sound like?
Bullish.
Right. And that's because a rally obviously means going up. So if you have this basic concept in your mind, you're already succeeding in your trading. This is the easiest strategy to trade. And the only thing that you have to do is be very patient. Mark, look here. You see the areas, and I'm going to get a little bit more detailed here. You see the areas that where the wicks happened. Got a wick here, wick here, wick here. But notice how price still closed here. Same here. Notice how price still closed here.
Mhm.
Notice that every time it does that, price seems to be getting uh is holding this level pretty strongly. So you know we have a good level of resistance here. We have a good level of support here. All right. So once you identify that, all you're gonna do is just wait for the breakout. And you could use volume to get in here. You could use momentum indicators to get here, or you could just wait for price action, wait for the price to break outside the box, take it to the upside or the downside. This is the simplest method to trade. Now I'm gonna say it can backfire, and I have shown examples of that. Finding examples of this is kind of, if I could find one, I'll show you guys. But the reason why this could backfire is because what could happen here is manipulation. This is where price gets manipulated the most. So you have to also be careful about that, because what could also happen in this box, you get the price drop, get the base here, and then you get something like this, right? But then what ends up happening, this, if you see this happen where it goes up a little bit and then you see this immediately, this was manipulation right here. From this point to this point was manipulation. All right. A lot of people don't recognize manipulation when they see it, because no one's really taught this unless you just have somebody to teach you this. But manipulation is when the market moves in the wrong direction first and then moves into the correct direction. What this is here, this whole area in this circle is, it's market makers, exchanges, and big players looking to stop hunt right here. So let's say you put in a long position. Well, maybe not even. I would even say a stop hunt, if anything. What would happen here? They will push the market up higher, get people to FOMO in and buy in here, and then what would they do here? Get you at the peak, because look what happens. This is a resistance zone. You see here how the wicks are respecting this area. So what would happen? They would push the market up here, then they would knock it back down at this point. So that's literally what could happen with this. That's why I said I'm interested in this currency, but at the same time, I'm cautious here because I know their games. I know how they play with these moves. But it is still looking good though, momentum wise. Is everybody following so far?
Mhm.
Yeah, I'm with it.
All right, sounds good. Sounds good. So when we look at,
Zone.
yeah, go ahead, ask a question.
If I was gonna trade that zone, I'd probably wait till the next candle close after this one, after the breakout.
Yes, that's actually what you would have to do. So you would have to wait until tomorrow's daily candle to close, because literally this candle could close up here, and then next thing you know, it could move back down into here and close down here, and then you'll be lucked out, and it'll look something similar to these candles over here. Now, what could also happen? Let me draw that out. You could get the move here, right? And this is a sneaky move too. You could get that move here, but then you could also get a candle that comes back inside the box. if you get something like this, and let me darken that so it can be differentiated. So if you get something like this, more than likely this market's gonna come down here and come probably back down to the lower end of the box. So it's just something that you have to observe as well. And a lot of times I say keep your trading simple. You're not gonna have a trade every single day. And if you do, then you're probably trading like the 1 hour time frame, the 15-minute time frame at most, maybe even the 5. But real people that trade, they're not trading every day because there's no point. The point of trading is to find quality over quantity. This is why if you check out my trades in the Discord, when I put out trades, I don't put out a lot of trades for you guys, but when I do, they're either really big trades that do really well, or they're trades that make a quite a bit amount of profit. Like if y'all saw the Mexican peso trade in the Discord group last week, it went up 8,000 points, nearly 9,000 points in from since last week to now. So it's all about finding quality trades. If you could find trades like this here, look how much of a percent jump that is. So you would actually enter in somewhere in here. Your take profit would be somewhere in here. So this was 143 points or percent. And if you had leverage traded something like this, you could have literally made your month salary or 2 months or 3 months worth of salary just by finding a quality trade. I always tell you guys, and I'm very firm on this. I don't believe in starting an account with a lot of money. I always tell everybody start your account with $50 to $100 to trade. The reason being is because if imagine having a $50 account versus a $500 account. Let's say you get your $50 account to 1,000, and then you get your $500 account to 1,000. And let's say you just got greedy and you blew your account. It's gonna be more psychologically affecting you if you lost $500 versus the 50, because you literally turned a $50 account to 1,000. That's pretty impressive versus the $500 account. That's how you should look at trading. Not making big money right away, but you should look at it as a long term game. That's the point of trading. It's long term games. All right, that makes sense.
Quick question on that.
Yeah.
So, um, so you sent me the link for Hugo. I haven't really played with it much yet,
Right.
but will it allow you to have multiple $50 accounts so you can play with different trades, like different pairs with different accounts?
You could have 100 accounts on Hugo's Way if you wanted to.
Okay. So I could trade the peso and on one and XRP on another.
Yes, sir.
Cool.
Yeah, that's actually what I do. So I have actually, I think I have 4 accounts on, not on Hugo's Way, but on another one. But there is, you could have one account for your, for crypto only. Then you could have an account for, let's say your day-to-day activity account. Like let's say if you want to go, like your grocery store account, like your play account, but you make money in there, get quick money, get out, like you're scalping the market. Then you could have a long-term account for like where you hold trades for like weeks or months at a time. So that'll be Christmas money towards the end of the year. So there's different ways you could trade. It just comes down to what you're doing. And so that's what I'm gonna talk about in a moment about the week, the time frames, because this is the most important thing when it comes to trading is the time frames you trade on. All right. So I'm about to get there in a second. I'm gonna end with Ichimoku last. So I'm gonna talk about the time frames first. So when you look at this chart, this is the weekly charts. We're gonna start with the weekly chart and work our way down. So if you're trying to hold trades for a long period of time, this is the chart that you're going to invest on. All right. This is called the investor's chart. This is long-term trading. And I'm talking about weeks to years. Like this is actually I'll say months to years. For this is what this chart is designed for. So if you're gonna trade on this chart, you're gonna basically look at the monthly time frame. Probably not even this one, but mainly uh, the weekly time frame and probably the daily time frame to enter. And maybe you'll enter in on the weekly chart. So if you're looking at this market on the weekly time frame, let me show you guys how to look at this. All right. Each and also just to let you guys know if you don't already, each candle on this time frame represents 1 week. So every candle represents 1 week. And I want to break something down for you guys because I think this may help even more. So let me go to this candle here. So I'm gonna mark this candle just like this. And I'll put a line, this red line or this green line. I'm gonna actually make it red. This red line is going to be the start of the week. All right. And we're gonna go down all the way to the 15-minute time frame. So this candle represents 1 week. So if we go down to the daily time frame, each candle here represents 1 day, but this is where the week started. You see that? So this is where the week started and on the daily time frame, and look where it ended up here. Now if we go down to another time frame, this is the 4-hour chart. Every candle represents 4 hours. Notice here how the price or how the market started down here, right? Now see that?
Mm-hmm.
So notice how the week started here, but from this point to the end, this is the week. All this represents 1 week. All right, this is the 4-hour going down to the 1-hour chart. Right here, from this point, this is the 1 hour. All these candles represent 1 hour, pushing all the way here. All this represents 1 week. So let me go back and make this cleaner. There we go. So here we go. So from here to here represents 1 week. And then on the 15-minute time frame, you see how much smaller it gets here? So from here, this point, this is the start of the week. All the way over here represents all this is 1 week. So depending on the time frame you trade is going to determine how long you hold your trade. And you're not going to even want to come down to the smaller time frames unless you're going to want quick profits. And I'm about to get into that. So let me go ahead and go back to the weekly charts. So did that make sense and help you guys out right there? Let me show you something. So if you're trading purely the weekly time frame, you're going to want to identify the structure of the weekly chart. So if we look here, and this comes down to marking your support and resistance levels. So if we mark here, notice how price respected here. You have resistance. Price broke resistance here. Price was here, broke support here, came down, broke back above, and then look what happened. It held here as support. So if you're trading this on the weekly time frame, you're waiting for price action at support and resistance levels and for the momentum to grow. So you could catch these moves, these long-term moves. You could definitely catch these moves, but you have to be aware of where the market's at that time. So if you look here, let's focus on this candle right here. All right. This candle is letting us know that the market may reverse here. So I know some of you guys have been in the other classes. So when you look at this one, actually, I'm not gonna even put a line right there. I'm gonna circle this. So when you look at this, what candlestick formation is this? Can anybody answer? Want to take a crack at that?
The long-legged doji, maybe
No.
spinning top. I don't know.
I was thinking Doji, but that doesn't look.
Think of Thor.
Hammer.
Yeah, it's a hammer. So a hammer is telling us that the market may reverse here to the upside. Is that true? Not always the case, but it can happen. So and this is why it's very important to read candlesticks. I'll show you why, or give you a drawing of a hammer. Hammers, and depending on your colors, my colors are purple and blue. So I'm gonna draw you guys a hammer real quick. Don't laugh at my artwork; it might not be that great. So a hammer doesn't always necessarily have to look perfect, and that's why you got to zoom in on candles to make sure it is what it is, because you could get fooled if you don't zoom in. But yeah, this is a hammer. So a hammer could look like this, or a hammer could look like this, or something like that. Maybe a little longer body. But if it's like this long, this is more so like a dragonfly doji. All right, we got that. Making sure y'all got that. All right, so this here is telling you maybe I may want to buy some here. So what you're going to do at this point, I'll teach you guys how to trade a hammer. This is a basic candlestick. So you put your entry right above that candlestick, or right above that wick. So let's zoom in a little bit. So your entry would be right above here, slightly above. All right. Then your stop loss, if you're going to day trade, or if you're going to do that, your stop loss will be either the halfway point of this candle, or the very bottom, or maybe even the bottom of this range here if you want to. But I prefer the bottom closer to the bottom of the wick, not right on the wick, but close to the wick. All right, so stop loss there. And since this is the weekly time frame, you're going to have a much bigger stop loss. So if you look at the stop loss, how big it is from our stop loss to our entry, that's 23.26% of a stop loss. So what does that mean for us? Any guesses? I just want to see where y'all's minds at. Any guesses here?
As far as the
So
stop loss,
75 to 100 point profit. That's what you're aiming for.
Right. So what does that mean though when it comes to getting in this? What's our risk management gonna look like?
Oh, it's probably gonna be more tight, less even.
Right. So you're going to risk less for more. So if you have $100 account, right, and you're trading the weekly time frame, what leverage are you going to trade here? You're not gonna trade. You're not gonna want to trade like a times 100 leverage on this. That's just suicide.
Like 50 maybe.
Maybe even 5 or 3.
Yeah.
Because you want to ride the wave as long as possible. Or you might not really leverage this at all. You might just put the trade in as just as is and let it go. Because if you do that, if you use bigger risk on a bigger time frame, you're gonna get destroyed here. Let's go. Let me explain even further. So let me put a line here now. Let's go down to the 1 hour chart and let's see where this started at. Let's start way over here. Okay, so hold on, I forgot one thing. Let me go back to that time frame, that weekly chart. Let me go ahead and put the entry back. I just messed up. So entry right about there. All right, so let's go back now. Let's say we go to the 1 hour. All right. So we're almost there. So here, this is where that candle started. You see the market went down. And then our entry is right here, all right? So what's happening in here? The reason why you want to use small risk, because look what happens on the weekly time frame. I mean, on the hour time frame here. You're going up and down and about. So you're pretty much in the negative when it hits your entry. Like you're in profit for a little bit, but look what's happening here. you're getting whipsawed here. And if you had used a higher leverage and the market dropped down to this point, that's negative 13%. So more than likely you're gonna lose your account with that. Making sense?
Been there.
So you don't want to risk a lot of money there. So look how long it took you to really get in profit, because you finally did get in profit after how many hours? So you got triggered in here. So let's see how long it took. So it took you about 6 days here, measuring this out. It took about 6 days and 3 hours to stay in profit. You barely stayed above your entry once it got above. But look, if we go over more, look what happened. At this point, day 22, you're back negative again. You see that? Let's see. Let's keep going. You're back in profit here on day 22, but after a few hours later. And then look here. On day 24, you're in profit. Day 28, you're back negative a little bit for a little bit of time, like about right there. So yeah, day 28, you're negative. But after it took you literally a whole month, right here, a month and 2 days to be in profit. So right there, that's why you don't want to put a big risk, especially on the time frame that you're trading. Now, if you held this, it from this point to here, let's go up about right there. That's where you got triggered in on your trade. It took you 77 days to make all this money. So that's about 3 months almost 3 months. So that's definitely 2 months and some days afterwards, in about 10 days or so. But if you look here, look how much you made from this point to this point. From this point, you made 107% in 77 days. Now, if you kept on holding on to that, let's say you held up into the very end up here. Let's keep on going. About right there. It took you 103 days to make this profit here, to make about a 250% profit off one trade, just one trade alone. Y'all see that? So
Yep.
if you were leverage trading that, let's say you leverage trade at 5 times and you made 250%. What is that? At 5 times leverage.
1,250.
Right. So you made quite a bit of profit there after 103 days. So was this worth waiting for?
Yeah, I'd say yeah.
Yeah, because you made quite a bit of money for sure. And not just that, another thing is you probably made how much you think you would have made off this one trade here. Like, let's say if you used $100 account and you made all this profit, how much you would have made here?
300 points, for almost 400.
Right. So yeah, I want to hear y'all's answers.
If you did 5 times leverage,
Yeah, 5 times leverage, and you made 250%.
yeah, that'd be a 12. You cash out about $1,250, I guess.
Right. That is pretty accurate. So you would have made quite a bit of money right there just off one trade alone. Now, let's say you do the same thing. Let's say you find another good trade. All right. But so you have around $1,200 in your account or more, right? From 100. So let's go back to the weekly. So let's say you found another trade like this one, right? Let's say you found another trade like this one here. So if you find another trade like this one, let's say if you caught something like this and it moved 400 and you made 403 percent, and now you're going to increase your leverage a little bit because now you have more money to play with. So now you could increase your leverage just a little bit. Are y'all starting to understand how this is working? The how the
Yeah.
Oh yeah,
power of
for sure.
compounding is, and picking your time frames and what to choose.
Well, and when you're waiting that many weeks too, that's kind of part of the game is to be able to have this patience.
Right. And that's what trading's all about. And like you could like I was saying, like depending on what time frame you want, because you could trade the smaller time frames, but if you're gonna do like the 30-minute time frame, don't expect the market to go to 200%. That's not happening on a 15-minute or 30-minute chart. The big money is on the bigger time frames. That's why I don't really look at the lower time frames unless I'm trying to get some quick money. But smaller time frames mean, quick money. All right. For example, let's go on the 1 hour time frame here. Okay. So let's say we're focusing on this chart. Well, this one went parabolic, so this one was pretty good. But let's say we're focusing here. So notice one thing, and we're probably will look at this range here at this point. Notice how the market's holding support here. All right. So market's holding at support here. So more than likely, I'm gonna start looking for buying opportunities somewhere down here when I look at this market. All right. So if we say we put in a buy around this area, let me go ahead and put a line right here. Let's do that right there. Because we already know this is support. Let's go rewind this back a few. Let's rewind this at least to here. All right. So let's go to the 15-minute chart. And honestly, I probably would even, what I would look for here if I was going to invest in this or buy this, I'd probably box this market up. Something like this. I'll box it up here. And then I would put some lines here. Yeah, about right in here. So yeah, this is where how I would look at this market. So I noticed that it's not breaking here. So every time it touches this red line, I'm gonna probably buy here or look for a signal to buy. So if we go to the 15-minute, you can clearly see that this is an ugly range here. So let's go ahead and play this out. If we play this out, kind of looks cool when you play it out like that. But notice when you're trading in a range, the only thing that's going to happen is market's going to go up and down, up and down. So you can make profit here on the smaller time frame. And I always tell everybody the most money made and the most money lost is in this trading range here. It's not the trend, it's in this box. You want to know why, or do y'all have a theory on why?
I don't know why. I know why it's worked for me because, I mean, when I'm making sure I buy at the low end of the scale, it's easy to sell a profit, and the profit isn't always as high as I want. But even if I make some profit, it's better than nothing.
Right. And so the reason why the most money is made here and lost here, because there's an equal amount of buyers and sellers, right? First and foremost. So when the market gets down here, buyers are going to take over because there's an equal amount here. So they're going to push this market up. Their goal is to break to the upside. They did succeed for a little bit on the smaller time frame, but notice here, we go a little bit in here. The rejection, once you start seeing wicks form on candles, be cautious at these highs, right? That means price may sink back inside the box. That's why I don't like trading a lower time frame unless it's for getting in and out of the market. All right, and you see here made some wicks again. Price fell back inside the box, pushed lower. So this whole range here, you can make a lot of money trading this. If you're going to trade this, especially if it's like Bitcoin or XRP or something, you'll make a ton of money in these ranges. The only place you should be looking to take an opportunity when you look at this market is either at the bottom or at the top. You do not trade the middle. No, you do not trade the middle. You do not.
Stay out of this zone.
Yes, stay out of there. The reason why is because Mark, you don't know how high it's going to go, and you don't know how low it's going to go. So, say if you bought in at the middle, right? You bought in here, and it's going up a little bit, then all of a sudden it comes down. You're in an invisible area of support and resistance. There's no real support or resistance here. This is like the border area. All right. You don't want to trade on the border. This is getting into some trouble. So what you would do here, you put a line in the middle, try to put a line close to the middle. And notice when you put a line in the middle, notice how price is respecting the middle. So if
It gets a little more volatile in that
right,
line.
because a lot of buyers and sellers try to fight for that position. Because if it goes up there, it's in bullish territory. If it comes below, it's in bearish territory. So a way you can play this market is wait till it breaks below here, but you don't want to get stuck in that because you don't know if it's going to move sideways. You see how it moves sideways? It didn't really go up or low, higher or lower, and then eventually it went up. You don't know how long it's going to do that. Like even here, you see how it moved sideways for a long time and then it broke down finally. That's why I don't touch the middle. The middle is too dangerous. That's where people. This is why I said the most money made and the most money lost is in here. This green range. So if you are trading this, only trade the tops and the bottoms. Other than that, this is a good way to make money in here. You can make quite a bit of money. All right. You could literally make more money in this range than in a few days than taking a trend trade for a few months. That's how crazy this is. But that's something that you have to play with on your own to see for yourself. I would say demo and test this on a demo account first or a paper account before you actually get into live trading this, because this is where hearts are broken in here. I'll just say that. All right, so moving on, let me go ahead and cut that out.
I actually like that because I don't know if I have the patience for long-term trading.
Right. Yeah, and you have to find what is best for you, because I noticed everybody's personality is different, and some people are more patient, some people are not as patient, some people want to get in and get out of the market. So there's so many things and so many personalities in the market. That's why the market is driven by supply and demand and emotions. Each candlestick that you see it means it's a different emotion. All right. And the reason why each candlestick has emotions, if you know how to read candles, let me just do a little basic for you guys. I'm gonna draw a candle for you guys here. So let's say this is a bullish candle. I'm gonna clone this. This is going to be a bearish candle right there. Try to make it even. All right. So this is bullish. This is bearish. So how do you distinguish the difference between the two besides the color?
Well, direction.
Well, yeah, but if you're looking at it just like this, what else?
Well, they're about even.
Right. So if they're about even, that's not telling you much. It's saying, well, just like you could color this red and this could be bullish and this could be green and this could be bearish. So what would make this different? Ooh, I got
It's kind of stuck in that zone, I'd say, that buyers and sellers are about even.
Okay, let me show you something.
Yeah, that's all I'm picking up so far.
All right, I'm gonna show you how to read candles for real, for real. This is something that people do not do on live stream. I don't know why people that do market analysis don't teach
Well,
this.
and since they're so large, it's kind of how would you say? I'd say fear and greed.
Okay, I could get with that, but I'm gonna show you how to read this. And this is actually something that people do not teach at all. All right. So there's something called the open. Where does a bullish candle open?
At the bottom.
Right. Because it's going up. So we know that a bearish candle opens up here and comes down. So next thing we're going to look at. What's the next thing we got to look at for a candle to figure out what a candle is?
Close.
Right. The close. So we close up here. And we close down here. Okay. So this is how you distinguish between a bullish and bearish candle. So this is called the body. This is the body. Open, close, close, open. But there's more characteristics to a candle. So let's take it a little further though. So let's move this up a little bit. So now we're going to put some wicks on here. All right. Oh man, I'm not good at this. Here we go. So the next phase, what are these now?
High and low.
So where's the high for
the top wick?
Right. So let's do that. Is that for both candles or just the bullish candle?
For both.
Correct. And we obviously know this one's the low. All right. So when you look at a candle, this is how you read them. Ooh. All right. So we got all that. We got everything that we need here. All right. So when we look at this, when we look at the charts, because we're about to look at the charts again, when we see this, this is how we know what a bullish and bearish candle are. All right. So when we take this off now, actually, we'll just come down here. If you look at this market here, if we look at all the candles, the color is going to be what distinguishes them, of course. But if you look at each candle story, each candle has its own story. And if you have the feature on your trading view where you could click on the candle, I don't have mine on here, but if you look at the trading feature, if you come up to the candle and you click it, it will tell you the high and the low and all the volume and everything that was in that one candle. So since this was a bullish candle here, this is the low, this is the high, this was the open and the close, and then we see what happened here. The high, you see price at this high point, price was pushed down on this candle. So who was in control on this candle?
It's the sellers.
Why were sellers in control?
You know, looks to me that looks like it had a bunch of orders set right there,
Right.
like sell limits. That's my interpretation. But the buyers still have a lot of strength as well.
I would say buyers have like very, very little strength. Look how much. Oh shoot! Look how much pressure here was pushed this market down. Whenever you see big wicks like this is letting you know who's in control at this point. All right. Or who has more up of an upper hand here. All right. So we see that the market was pushed lower. And then you see what happened with the next candle. Market pushed lower. So it went from this high all the way down to this low here.
So previous support.
Right. So this is how you could read candles as well. You have to take this stuff into consideration because candles tell stories that people don't read. And if you miss the story, then you might miss out on the opportunity. Let's see. Right here, this was a long-legged doji. So this is saying that the market could reverse, and it ended up reversing right here. Wasn't a long reversal, but it did reverse here. And then you had this candle here. This one was actually interesting here because this one would have been a hard read because usually these candles don't happen at this level. These candles like to either happen at a very strong level of support or resistance, but this one happened at right at support. It's not a very strong one though, but market still pushed up. So that was this would have been a hard read here. I probably would have waited on the next candle to confirm, and then you got the bullish engulfing, and then the market start pushing higher at that point. So yeah, this was a hard read here, but just knowing these basic stuff could definitely get you into opportunities that could help you or get you in good trades. All right. Everything making sense so far? Any questions so far?
Yeah, I'm with you.
All right, good, good. Because I don't want nobody to be confused right now. So let's go to the next phase of this teaching today. And this is actually looking good right now for that buy, like I was saying. All right, so let's go ahead and knock this off. Throw this on. And I still stick with my buying bias here. Yeah, wow, it's going up for real. Yeah, so I had set to buy. Actually, oh, it's already passed. I had set to buy here, but I had to delete this for teaching purposes. But this is good for a buy right now. I think I might look into buying this coin. Rep USD. Are y'all familiar with this coin?
No, I haven't heard of this.
Yeah, I haven't. I just looked into it just now. I said, wow, what is this? But it's looking good for a buy right now. It's only 33 cents. This might be one of those coins that take off out of nowhere. You just like, what's this coin? But yeah, this is a buy right now. Don't know what it is or what it does, but it's a very strong buy. And I want y'all to know this. And if people are honest, if you talk to anybody in Wall Street, they'll tell you they don't care about fundamentals. Have y'all ever heard that?
I mean, I've heard it used in the context of it doesn't matter because the chart's a reflection of the fundamentals anyways. And
Right.
then you can see the events play out. Like you can go to the chart and be like, oh, this is that event, so on and so forth.
Right.
But that's how I've heard that referred to.
I'll say this. If you know how to read patterns and you know how to read candles, fundamentals mean absolutely nothing. That's why if fundamentals meant anything, XRP would be $1,000 plus. I'm not lying. Fundamentals mean nothing. And I learned fundamentals when I started trading Forex back in 2015. Fundamentals mean nothing at all. The
Well,
only time,
especially when markets are manipulated anyways.
right, and the only time fundamentals will mean absolutely anything is if there's war, or if it has to do with oil, or if there's another one, non-farm payroll. I don't know if y'all are familiar with non-farm payroll. Non-farm payroll is every Friday, the first Friday of the month. That's non-farm payroll, which affects the dollar. I don't know if y'all know that, but wait, look into that. you'll see that the dollar is affected a lot by farm people that own farms and put out uh, food for people. I didn't know that until I got into forex, and that was very interesting. I'll just say,
I know other traders to stay out during non-farm payroll.
right, yeah, because it's a very volatile day, very volatile day, especially if it's in favor of the dollar that day. Oh yeah, best believe that day is gonna be a big day. But let me go ahead and show you guys what I look at when it comes to trading Ichimoku. I usually start off with the daily time frame since it is the overall bias of it's the best of the both worlds as far as weekly and monthly, and then lower time frames because it does give you the overall direction, and then not just that, it also gives you, a good the momentum of the market as well. So the sentiment as well. So this is why I like the daily time frame the most. But if you're looking at it with Ichimoku, it don't look good here. The I'll show you why, and this is what I look at when I look at Ichimoku. So I when I was telling you guys earlier, you could know if you have a trade with one glance. So what the things that I'm paying attention to the red line, the blue line, the cloud, and what the current cloud is. So the twist here. So this is a KT twist, which is a Kumo twist. That's how you go from blue to purple or purple to blue or whatever your colors are. Here we also have a death cross here. So I'm already seeing this. This is not looking good to me off the daily time frame. And then also this is flat. Like this is like when I say flat, I'm saying like market is not going higher than this point or lower than this point. So this is a flat market to me. Even if this is kind of angled up, this is still a flat market. So here, flat market, I don't like it. Another thing that I do see here, notice how far the price is away from the Kijun. If you remember this one rule, you may make it may save you some trouble. Price always wants to stay close to this line here.
Price wants to stay close to it.
Yes,
Oh, so it always makes its way back there. You're saying?
yes. If and there's a rule for this. If these two, if the red line and the blue line are far apart like this, price wants to stay close to the blue line. So it may act as a magnet and pull it higher. All right.
Okay.
So that's something to remember. Now, if anything, if you want to know if a trend is strong, the trend is going to stay on the red line. You see how it's riding the red line here?
Right.
So if the trend is starting to die, it's going to break underneath the red line and break the blue line as well. So right here is when the market died. It started losing momentum. Here especially. And then here you know for sure. And then look what happened. So just those basic cues let you know that the market's getting weak here, just from looking at the Ichimoku system. And that's why I don't really pay attention to what analysts say all the time, because there's things that they and it also comes down to the system too that they use or whatever however their style of trading is. But there's so much to factor into trading because data changes so fast in crypto. That's why some days when I give analysis, I don't like giving analysis because there's no opportunity here. Or sometimes I won't look at if someone asks me to look at a chart for them, I won't look at the chart for like I'll look at the chart, but I won't give them analysis because there's nothing to say about it. So if y'all ask me to look at a chart and I don't say nothing, it's either I didn't see it or there's no opportunity. But more likely there's no opportunity because knowing how this system works, it gauges momentum. Well, it gauges trend, and then also it tells you where price could potentially go to. But going back to what I was saying,
I'll be back in a minute, okay?
go ahead. So going here again, this is already giving me bearish indications that this market is more so bearish, but at the same time, Notice that this is far away, so price does want to pull back up to here or get close. It may not pull back all the way, it may come halfway, but that's fine. That's what you want to look for. Now, to confirm this, you want to go to the smaller chart. So here, this is when I say, okay, this is telling me that there's some momentum now. All right. So we got a golden cross here, which is a bullish signal. We got a bullish Kumo twist, which is bullish signal. We got this green line, our Chiku span above the price, and it's far away from price, which is a bullish signal. And price, we have a Kumo breakout here, which is a bullish signal as well. So we have 4 confirmations here that price is going to do this. All right. So that's what I like to look for when I look. Even the Tinkinson and the Kijisen are angled up, and price is bouncing off Tinkinson. So this might be a really good opportunity to the upside. You see that the red line is being respected by price. It's bouncing off the red line, so we may see price definitely move higher. But you want to wait for the candles to close, and then you look for your opportunity. Another thing, if you don't want to look at all that, the quickest way to see if you have an opportunity is look right here. All right. If you see span A and B angling up, this is all you need to know. Bullish. All right. So if I look at a chart and I see that, I'm immediately saying, oh, this is bullish. Then I look at these other things, bullish, bullish, bullish. I look for all the confirmations, bullish. So after I do all those confirmations, I'm looking for a bullish opportunity. So next thing I'm going to do, I'm going to look at this, say, okay, the momentum is definitely in favor of the bulls. Here, momentum is very strong with the bulls. So what I would do when this 4-hour candle closes, as long as this line does not close underneath here, this should be actually negative 20, but the person that created this indicator messed up. It's actually supposed to be reversed. This is supposed to be negative 20. This is supposed to be negative 80 down here. But anyway, point being said, if you see this happening, if this cross back underneath here, I would say that this market may start to falter. But here is saying that we have a strong opportunity to the upside. So market does look like it wants to go higher. So when that 4-hour candle closes in the next 33 minutes, this is where I would like to buy. All right.
It looks good. So in theory, you could start from front to back with the cloud.
Yes. The cloud is made to not, it's this indicator is designed in the past, the present, and the future at the same time. I'll show you. So the past, the present, the future.
Yeah, it looks good.
So you got all 3 confirmations. The past is saying bullish, the present is saying bullish, the future is saying bullish. So that's why I like this. You got just those 3 confirmations there is letting you know bullish. And it forces you to be patient. So let me give you an example of a bad opportunity. So let's look for a bad opportunity. Let's go. Actually, name a chart. Give me a chart.
Let's do Euro USD.
Euro USD. Let's see. Forex. Bam. Oh, my chart is so nasty. Oh, yeah. So this is where I have it coming down to. I don't know if you've seen that, but.
Yeah, you made a call about a few days ago now.
Did you take a short?
Oh, no, I messed up in this area pretty big.
Oh, man. No worries. There's some more opportunities coming. But yeah, I see it coming down.
Yeah, no big deal.
Let's see. So for this particular one, actually, it might hold here. It might not even come downward to where I was saying. It might actually hold here.
Yeah, I still think so. Here's my analysis. I think 1775, but like you're saying, it looks like it might want to hold this area.
Mm-hmm.
So, like, I mean, I would be waiting for a whole other candle close before that can be determined.
Okay, gotcha. Okay, so look here. I don't see nothing bad here yet. Let me look for a bad opportunity. Well, obviously a bad opportunity is in here. Okay, let me explain why this is a bad opportunity. If you're trading Ichimoku, this is a terrible opportunity. All right, so let's go back in time to at least right in here. Let me explain. So immediately when I see this chart, I'm already saying, well, there's no trend, and I'm not. And Ichimoku, you want to catch the trend. I want to catch these moves here. Oh yeah, if you have been a student like maybe last year, you would have caught it here because I told everybody, my students, to buy here, and they caught this. That's about how many pips was that? 1,000 pips on this. That's not bad. But anyway, let me show you why this is bad. So when you're looking at Ichimoku, what you're gonna want to identify is the cloud. And like I said, if you read the cloud first, it'll tell you pretty much everything you need to know. And then the green line will tell you everything you need to know. But here, what's this saying? When you look at it, what does that tell you right there? Just with the knowledge that you have now, what is that telling you?
I would think it's gonna go sideways.
Why?
I see this flat area here,
Uh-huh.
and then that's about all I have to go off of.
Okay, well that's actually fair. That's actually a good answer.
Yeah, that's it. That's all I got.
So span B is flat, and span A is flat. Both span A and B are flat. Notice here, span A and B cross over here. When you get so span A is on top when it's a bullish market. No, span A is on top in a bullish market. Span B is on bottom in a bullish market. And when they cross here, they intersect. That's when they flip over. B's on top, A's on bottom. All right. So that's just something to remember. But here, they're both flat. This is letting me know that this market is trash to trade for a in a trend. I don't like it. Don't touch it. Another thing is if you see, like I said, this green line here, if you see it entering inside the candles like this means no. This don't look at this. I'm being this here. This means do not even bother looking at this chart. That just this alone tells you no trade. All right. So if you're gonna, and it doesn't mean there's no trade to take. What I mean, there's no trade to take on that particular time frame. That's what I'm
Gotcha.
saying. So you could go down to maybe like the 1 hour chart and see, because you see here on the 1 hour chart, oh, there might be a potential trade. 4 hour, maybe a potential trade. Daily, no, nothing. So now you could come to these smaller time frames and look for opportunity. So let's say we play candle after candle. Yeah, I was thinking this was going to go down. Okay, so if we go back a few, let's go back a few. Let's go about right in here. So if we look here, reason why I would be a little bit more bearish here, and I'll show you why there could be a sell opportunity. Span A is down. Span B is down as well. Chiku span is underneath price, and price is underneath the cloud. So we may start pushing lower. That's my first thoughts anyway. That's how I would look at it. How I would get into this opportunity, I would set an alert here, right at that wick. I wouldn't put a sell stop yet. I would put an alert there to see if it triggers my alert and then take that opportunity. So here, let's play it. So there, my alert got triggered here. Span A is still down. Span B is starting to flatten out a little bit, but it's still overall bearish. So let's play it. So now we're triggered if we put in a trade there, but I wouldn't put in a trade just yet. So it did trigger us in, if trigger the alert here, and it's just wilding out. So now if you look at the 15-minute time frame, there's no trade now. You see that? Reason why there's no trade, the green line is gonna start to go back inside the price. Let's play it a little bit. So there, no trade now. We can't even look at this. So we would have had not really made anything here. This was just a watching opportunity. So now what I'm gonna look for on this chart, let's see. Momentum is not there. Nope, we don't have no momentum. Here, nope, still probably got a range sideways a little bit. Okay, so we end up going higher there. So let's go back. Let's see what happened. So maybe around this candle, that's when it started to get bullish. So let's go back right about there. So let's look at everything all together. So bam. Okay, right here. Okay, so yes, momentum did pick up right in here. So let me go back one candle. Let me see what that looked like. So yes, right there. And I don't want to go into this one too much yet. This is gonna be for another day. But this one finds momentum. So right here is where momentum came in. As soon as they crossed the 25 threshold, and it's up here now, that's when the momentum was in favor of the bulls. And then looking here, yes, right there, it told you to buy right there. So you should have actually been in this trade right on this candle. So yes, you would have bought in here. Stop loss. I could take that off now. I would actually, no, I'm gonna keep that. Stop loss will be here. And I'm gonna turn this another color. So red is stop loss and green is entry based off the momentum. So if we were looking at it here at that point, yes, this is where we would have bought in at. And honestly, we could probably push this down a little bit lower to catch more profit. So if we did that, now we're triggered and in. We're definitely in. Momentum's looking good here. So if we were doing that, we're at least up 15 pips on Euro USD right there. So this is why I say when it comes to smaller time frames and bigger time frames, Ichimoku will tell you to stay out of a trade, but here we gained a potential trade setup here, so we're good to trade now. And then look, if you had got in at that point where we saw the momentum jump in at the highest peak of this movement, it was 83 pips. And then it fell back to, you would have made at least 50 if you got 53 out, if you got out right there. But what you would do at this point, you would move your stop loss probably here. And if anything, it might hit your stop loss at that point because it looks like price is far away from the blue line. But we'll see if the market does pull back there. Let's see. Okay, nope, it didn't get all the way through. So it did hit your stop loss and then it went up higher. So that would have sucked. But is this making sense to you though?
A little bit.
Okay, a little bit.
No, it's fine. You know, it's a new method, so.
Right. And had you stayed in here, it would have been 107 pips of profit, which is pretty good in Forex. You trade Forex?
Yeah, I'd kind of rather stick to Forex for the most part, personally.
Oh, because why you rather stick with Forex for now?
Well, I mean, less volatility as compared to crypto, anyways.
Right.
I mean, that's probably one of my biggest reasons. And I'm kind of committed to it at this point, also.
Okay.
Yeah. That's where I started. You know, like I had a couple of bags early on, around the same time I even got involved in the markets, but I started learning the Forex principles first. So I feel like I want to follow through with it.
Got you. I'm gonna say this because I actually started in Forex too. I'm gonna say this: if you could trade Forex, you could trade crypto.
Yeah, I believe you.
And the reason why I trade crypto the same way I trade Forex In the same way I trade stocks. I'll look at a stock and show you it works the exact same way. These markets are all the same.
Yeah, because then they follow the same patterns usually, and then they just behave a little different for obvious reasons. But
Right.
I'm with that same principle.
And the crazy thing is, uh, the cryptos is crazy. I don't blame you because crypto is crazy. But when it comes to crypto, it's all about there's a lot that's involved in crypto. I don't even know how to explain crypto because crypto's another animal. Out of all the financial markets trading, I think crypto is definitely the hardest. Just because it is so volatile. So I do see where you're coming from there because crypto is a monster.
Yeah, and I've had my wins and losses day trading crypto. Um, sometimes the gains went away in the same 5 minutes.
Right. In the maybe 2 seconds.
Yeah, it was very, very quick. It's probably one of the only trades I actually screamed on.
Yeah, I know what you mean. I had a trade on XRP one time. Man, this was when XRP was trading up at $2. That like I remember this day too, and it's crazy thinking that XRP traded at $2 one time. But I have a photo of it. But XRP on a trade XRP trade I had taken, I was literally up $3 in like literally no longer than 2 minutes. In the next 2 seconds, I kid you not, it dropped all the way down and it knocked me out of my trade. I said, "Wow, really? This is crypto trading? This is
And then
crazy."
probably reversed, huh?
And yep, it did.
Yep,
Oh,
you just got to laugh at the absurdity.
yeah, you do. It's very absurd, very. So I'm gonna just say this: if you do plan on trading crypto, it is you could make profits a lot faster, but it is very volatile for no reason.
Yeah, so I just kind of want to tread lightly in that realm. I mean, and
Right.
also at least get used to the behavior of one market before learning both of them.
Right. That is
Just because of the style that I learn, like I
right.
feel like it would be more beneficial to me if I, you know, maybe got more proficient at Forex first.
Right. What style did you learn? Like how do you trade?
Well, at this point, I've only been trading for a little under 2 years.
Okay.
Um, I like to use Fibonacci and support and resistance. Try to keep it simple.
Hmm.
Um, I will trade the lower time frames mostly for entry points.
Right.
Um, but I'd rather do day trading and what else do I use? And I'll use the 50 and 25 EMA. I think
Right.
that's the ones that I'm using. And that's about it. I don't use much else. I do like the Ichimoku analysis though,
Uh huh.
because I've seen you make pretty quick analysis of it, and I'm like, oh yeah, that looks. I mean, that's the whole point, is to save time,
Right.
um, and then become more confident if you can find those additional confirmations, and that way I can actually get away from the charts. So that's what
Right.
I'm looking to do. But so far, that's about all I use.
Got you. Now, and this funny you say that because I used to use Fibonacci as well until I figured out Ichimoku had built-in Fibonacci.
Yeah,
And
and I'd heard you mention that recently as well.
right, you see these flat levels. If you see a flat level, that's the 50% level on Fibonacci levels.
Gotcha.
And you see here, flat level 6180, flat level here. It's crazy. I'm just gonna say the guy that created Ichimoku is a freaking genius. I don't know what was going through his psychotic brain. Like he must have like 400 to 500 IQ because there's still some things that still blow my mind with this system that I play with. And wait till you get into the advanced Ichimoku, then your mind's really gonna be blown. Did you know the Ichimoku system actually created the Elliott wave system?
So no, I didn't.
Yeah, the Ichimoku wave theory which is the advanced, and you can't, and it's crazy because this system been out for 100 of like since 1960, but
Ichimoku?
nobody, yeah,
Wow.
and nobody knew about it until somebody went to Japan and said, "What is this?" and brought it over to America. But they didn't use it right because they didn't translate the Japanese book correctly. So Ichimoku has a lot of secrets. Even now, I'm still finding out some stuff about it, and nobody in America knows like the full secrets unless they, go to Japan and learn it. I do plan on going to Japan to learn the rest of this because I am very curious on how it works. But if you learn the time and the wave theory and the observation theory of Ichimoku, it's like almost cheating the market. And I don't use it too much because I'm still trying to learn it. But let me show you like a little of its
Talking
power.
about wave theory.
Wave and time theory. Like the time theory itself will blow your mind, but the wave theory, that's another thing. Let's so here. So you see these points here, these red lines coming down, the vertical lines. I don't know if you can see them or not.
Yeah, I can see him.
Okay. So I'm not going to go too deep into this, but these are in the time theory, these are reversal points of the market or where the market's going to speed up based off support and resistance. So this is the beginning, so you don't count this, but day 9 here, this is where the market moved down afterwards, and then around this area, day 17, the market went to the upside. Day 26, the market accelerated to the downside, and it's based
Yeah, I
on
see that.
support and resistance. So when price gets to this next level, which is March 22nd, which I don't know how long that'll be. I think that's in 2 more weeks. But once price gets around here, I'm looking for the market of gold to either accelerate to the downside or to move back up higher into this price here. But if you were in the group chats last week, I caught a shorts on gold, and we're already about to hit target 1. Actually, we hit target 1 here. Target 2 is right here. I don't know if it's gonna hit these targets down here, which I'm very doubtful of, but I'll take 2 out of 4.
Right. No, that looks really good.
But yeah,
All right, I'm back.
I'm gonna teach you this. Welcome back.
Thank you.
But this is something that you'll learn later down the line how crazy this system is. Like the guy that created this system, he's I think he's borderline psychotic.
You have to be.
I really don't understand how he came up with this system and the time theory, because Ichimoku literally was designed like this is the original Ichimoku. So if I take this off, this is how it was designed in the beginning. Just these 2 lines. And then later, according to the Japanese books, they added the Kumo cloud and this line. All right. So this is what made the system very intricate for me when I was looking into it. I said, well, how did he come up with all this? What was going on in his brain? And when you start finding out more about it, you'll see what I mean. Why is it so crazy? Like this whole system is ridiculous. And it's very simple too, but it forces you to be patient.
Yeah, that's what I can tell just by what I've learned so far.
Like I'll say this, you'll like most traders are not patient, but this will force you to be patient to wait to catch like these big moves like this. I remember trading this too at that point back in May. I think I caught gold up to here. I wish I actually held it. Dang, look at that. Like how many pips would that have been? That's ridiculous. So if I had stayed in from here to here, I would definitely be on an island right now. That's a big move. But no, this is something that I definitely think people should really take, especially price action traders. I think price action traders should take advantage of using this system. I think they'll do really well with it.
I think that's why it's going to help me a lot.
Oh, you trade price action?
Well,
Yeah, I just pay attention to candles mostly.
Oh,
and
yeah.
also on the gold,
Mhm.
you have to understand what's going on with the economy too. And every time they pass a stimulus of $1.9 trillion, that's printing more cash. That's going to increase the value of gold because the more dollars floating around, the less value the dollar has.
Right.
Which means that gold and XRP and Bitcoin and everything else is going to go up in value.
That is also true. Now, here's the thing about that, because that's something interesting. Because let me see, what was the exact date of when they started pushing the people to go in their homes for the coronavirus? Was like
Wasn't that like-
February?
Wasn't it March?
I think very beginning of March.
So let me look at that day. So the market for gold. So this was like the beginning of the week. So it was up, but then it crashed. So it crashed how much? Crashed about 17%. That's pretty big for gold.
Well,
then-
that's
But
those
then
crashes,
immediately
but not real crashes.
it went up higher the same month. But if you look at like the Dow Jones and everything else and other like fiat currency, most of the fiat currencies crashed. Well, mainly gold. I mean, mainly the dollar, but gold held pretty well while the market was suffering. And let me show you, because a lot of people did not take that into consideration. Like here,
I know you
Dow
talk about
crashed
manipulation
hard.
a lot.
huh?
I know you talk about manipulation a lot, but I know for a fact that gold and precious metals are one of the most heavily manipulated.
Uh-huh.
JP Morgan was fined like $1 billion, which is pretty much a slap on the wrist for how much manipulation they've done on the metals markets.
Uh-huh.
But every time you see those big dips, it's not because of natural supply and demand. That's from the manipulating with paper contracts that don't have the actual physical gold to back them.
Right.
They do that on purpose because that's how they keep the faith in the crappy fiat dollars, by making you think that it's worth something by purposely keeping the value of gold and silver low.
Oh man. Here it is. This is what I was looking for. So I was actually trying to find this one here. So I remember this. I was actually so mad because I missed this trade. I was looking for a short, and oil literally dropped to like 0.
Less than zero.
Negative. Way negative.
Like they're not even showing the real number here, but looking at the chart when I saw it that day, I was so mad because I was looking for a short here. And percentage wise, look at that percent.
Yeah, it's absurd.
Oh my gosh. I didn't know what to do that day when that happened. I was just distraught. I said, how did I miss this? This would have been $1 million trade.
Didn't it go to
If
like
not more.
$35 that day?
The same week, yes, the same week it went up to 17.
No, I mean at the low went down to like something like negative $35. I just watched a video talking about it, I think a couple days ago.
I don't recall that, but I could look into that. You might want to send me that info. I don't think it went that low. I don't think it went that low. But after that recovery, you should have been in a buy here, and you would have been in profit from that point on. At least from here.
Did you know that Donald Trump took advantage of that free oil and basically filled up our stockpile for our country?
He should have.
He did, yeah.
Yeah, I think he did.
Like why?
Yep.
Like why would he not?
I mean, he's a businessman, so it makes more sense in their minds.
Yep.
Pretty sure my friend reported that to me, that he just went and bought up absurd amounts.
Yeah, like our stockpiles were low under the previous presidents.
Right.
He basically replenished all of our stockpiles for free.
Dang. That's crazy.
Like millions or billions of barrels. I don't even know how much, but ridiculous amounts.
He's like, oh, they're on sale.
They're free. Shoot, take it.
We'll pay you to take them.
All right, I'll just take them at this point.
Oh, we also got more oil from Iran trying to get around their embargo, and we've confiscated a couple ships that their oil ships trying to deliver in Venezuela.
Well, apparently, Biden's trying to go to war again, so oil is a big thing again.
I mean, it's been going up quite a bit lately.
Well, Biden's just a puppet. He does what his puppet masters tell him to do.
At least at this point, I think he just moves on his own mind because he doesn't even remember half the stuff that goes on.
It doesn't even seem real.
I'm pretty sure he has an earpiece and someone's telling him every move to make. He's not smart enough to run his own life, let alone a country.
I don't know, but something's off with him big time. Oh man,
time will tell.
Man, I might start trading oil again at this point. I used to trade oil all the time. I think my second biggest trade was oil. And my first biggest trade was the Mexican peso. Made $10,000 off the Mexican peso. I said, what? In 2 weeks.
Nice.
Might have to do that again. Oil and peso were my babies. And then crypto said, hey, like, who y'all? But
well, I remember I told you I'm not very good at patience earlier.
Right.
I just realized how I can do that. I can look for the big plays where I can be patient, and what can help me with my patience is by ignoring it, by continue to trade the short-term trades. That way I kind of keep my mind off the long-term one.
Right. That might help.
Yeah, you just gotta sit and forget it. It's so hard.
Oh my god.
But I mean, you're an XRP bag holder, so you should be trained with that now.
Dude, at this point.
No kidding. Especially seeing my XRP go from 90,000 down to under 30,000 within a couple weeks.
Yeah, that hurt. That hurt big time.
That would. That's.
Oh, but I didn't worry about it because I knew it was only because of the SE lawsuit. I'm like, that's gonna, once it settles, it's gonna go higher than it's ever been.
I mean, yeah, and that's what we went through already. So if we can handle that, you know what I mean?
Yeah.
That was a nice training session for us, I think.
Yeah, I actually seen mine go from 90,000 portfolio down to 30,000 twice already in the last few months.
You just get tempted to sell, but it's just better if you hold. I think it's too risky to sell.
Yeah.
At this point.
Well, when it's bouncing up and down consistently, I've been selling 5,000 and buying back on the dips. I've done that probably like 5 times this week or the last 3 or 4 days.
Speaking of buying, there's actually a buy signal on the XRP right now.
Every time I've sold the XRP and bought back the dip, I've gained 100 or 200, maybe 300 XRP every single time. I don't look at my trades as far as dollars. I look at it and how much it increases my XRP bag.
Yeah, that's how it'll be in the future, anyways.
True.
Because I don't consider 1,000 XRP being like $500 or whatever. I consider it being $1 million because I'm thinking about the future price of $1,000.
Absolutely.
Like you could have like a little bag and still be successful with XRP.
Yeah, like my friends with only a couple thousand in their bag, I'm like, no, you gotta hold them. Like, don't sell. Like when that smoke and mirrors came around, I'm like, make sure you don't sell. It's just a trick. And I had a couple of people express their regret to me for selling, like in 20-cent range.
Right. Let me see. Well, I'm gonna go ahead and end class here today. I think I covered pretty much some basic stuff for you guys. I think this is just the basics here is gonna help you guys. I will put the recording in the Discord group, so be prepared to watch that. It's gonna be in the recording section. So, and if y'all don't know where the recording section is, you might want to look for it. But it is in the student only section. It's at the bottom. All right.
Cool beans.
All right. So I appreciate you guys today joining me.